Hello traders and welcome to another video review. Today is Tuesday, June 3rd, 2025. Let's find out what's going on the economic calendar for today. Overnight data during the Asian session were quite interesting. We got data from Australia, company gross operating profits, current account, and ABA meeting minutes. Remember last time we got last week a cut from the Reserve Bank of Australia. All of this data worse than expected. Manufacturing PMI from China worse than expected and slowing below 50. 50.4 was the previous number. Forecast was 50.7, so the market participants expected an increase. Instead of that, they received decrease to 48.3. Not good at all. We are still waiting for the CPI data from the European countries, Switzerland, Hungary, Germany, and the other countries. Eventually, CPI data from the Eurozone are expected to be released at 11 o'clock. The market participants expect a decrease from 2.2% to 2%. Together with the CPI, we got core CPI and unemployment rate that should stay at 6.2% level. Bank of England MPC Treasury Committee hearing starts at 11:15 today, and then we are smoothly enter the US session. We got the jobs openings at 4 o'clock and factory orders at 4 o'clock as well. Global Daily Trade Price Index from New Zealand is scheduled for release at 5 o'clock. 1 hour later, ECB President Christine Lagarde will give a speech. And at the end of the day, we got the API weekly crude oil stock data from the US scheduled for release at 10:30. Without any further ado, let's take a look at charts. We start with euro-dollar. So the euro-dollar moved above the technical resistance located at the level of 1.1425, made a local high at 1.1455, so 20 pips higher, and now is back towards the technical resistance, which is why those two levels, 1.1378 is now technical support and 1.1364 is now the technical support. The market continues to move up because there is still wave 5 in this impulsive cycle according to our scenario. There is still wave 5 for to develop, and right now we got the first wave to the upside. Possibly first wave to the upside looks kind of a bullish, looks kind of a impulsive. Okay, now we got the then we got the correction obviously towards the technical support, and now quite bullish start of another wave to the upside. Let's see what will happen. As long as we trade above the level of 1.1209, the outlook and the scenario remains bullish. Wave 5 in progress, momentum strong, 62 points positive, bulls are in charge of the market. Euro dollar, we had some data from the Australia. Let's take a look at the Australian dollar. Australian dollar doesn't do much. Australian dollar, let me just switch to daily, maybe something like this. There you go. What it is? What's that? What that's supposed to mean on this chart? We got very nice rebound, and I think we should place some sort of the levels here. Very nice rebound. 5,917 is the rebound low and technical support. Local resistance, quite hard to say because it's so inefficient. Maybe 6,515 historical technical resistance might be working quite well. However, there is nothing else here that should be marked as the technical support because the market doesn't actually respect any of that. So possibly what we will do is if we will mark this, okay, and that is going away, and what we will do is we will mark this level here as the bottom of this whipsaw trading conditions, I would say, straight on. 6,348 whipsaw trading conditions, pin bar giving us a clue that the bulls have a problem with 6,500 breakout. Momentum up and down, up and down, up and down around the level of 50, but bouncing from it. So still bulls are trying to push the market higher, but they actually don't have much of the idea of what to do right now. All right, let me just go back. There you go. And this is only valid, let's say, of course, technical pattern and a show of a strength of bulls on Australian dollar as they want this market to go higher. So we need to break out of this consolidation. New Zealand dollar instead looks almost the same. So it doesn't actually, yes, there you go. We got this technical range. Now we are above it. We broke, as expected, we broke way above this range. We broke above this supply zone. Let me just show you guys. There you go. We broke above the supply zone, and now we're back because there is a bearish engulfing pattern, and we're back inside of back to the trading range after we hit the extremely overbought market conditions. So right now it looks like we are still trading above the trend line. Let me just extend this trend line. So we got something like this, let's say. Big bearish engulfing pattern back inside of the trading range. There is one interesting level here that we might obviously label. There you go, 5,987 technical support, short-term technical support, but there is nothing, really nothing engaging. That's what is going on here as the market keeps doing the whipsaw trading. So even if we apply some channel maybe, so let's say it works so not too bad, but it's not definitely something very, very interesting. Nevertheless, it's worth to have it on your chart. Now the momentum is 53 points. We are going down towards the level of 50, obviously, so that the level will be put into the test. Even 100 periods moving average at 5,934 might be tested before we will eventually bounce back up again. All right, crude oil on a 4-hour time frame chart still trades inside of the trading range. As you can see, this is another market that trades inside of the trading range. We got Australian dollar, New Zealand dollar, we got the crude oil. All of those are commodity currencies, and the crude oil dependent, basically Chinese export dependent and the commodity dependent currencies. As you can see, piercing pattern here at the top of the range, supply zone 63.87, 64.21, rejection, movement to the downside back towards the 100 periods moving average. Momentum is not that bad, 57 points, so the bulls might still try to move higher. Nevertheless, we need a decisive breakout out of this range on the crude oil in order to form something much more interesting than this. So we wait for the breakout. Now, last but not least, the Bitcoin. What is the Bitcoin market doing? We made a temporary low at 103,000. The market tried to move higher. As you can see, went towards the level of 106,427 and got rejected for now. And this is a very important level because the 100 periods moving average on a 4-hour time frame chart is just above it, 106,870. So if we break above this situation here, technical resistance and the 100 periods moving average, the momentum can break into the positive territory, and the bulls might push the market higher even towards the trendline resistance, right? There is another technical resistance, 8,372. That's obvious. And then there is a technical resistance. So please keep an eye on the Bitcoin. If it breaks above the technical resistance, it looks like the market want to do this. And if the bulls will not fail, there is a chance for higher levels. Otherwise, we will get another red candle, then the technical support is under pressure. Next one is somewhere around $100,000. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye-bye.